world-leading impact investment capability. Tim also serves as the chair for UNPRI, Environment and Social Theme Investments Working Group, and is involved with various strands of the Global Impact Investing Network. Welcome, everyone. Maree, we'd like to start off the conversation with you. If you could introduce the Australian Communities Foundation and what factors influenced your decision to move to responsible investing.
Sure. Hi, Kamal, and fellow panelists and all audience members. It's just really lovely to be here with you tonight. Coming from outer eastern Melbourne, Australia, on the Wurundjeri land of the Kulin Nation, and I'd like to acknowledge elders past, present and emerging, and note that this land that we're on in Australia was never ceded. So it's an absolute pleasure to be here tonight to talk to you about Australian Communities Foundation and our journey towards impact investing and responsible investing, together with our key partners from Adam, who's one of our directors, and Tim, who's our investment advisors. A little bit about Australian Communities Foundation. We are an unusual community foundation, so we've been around for 22 years. And that makes us one of the oldest and largest community foundations in Australia. We started as a place-based foundation, and we're originally Melbourne Community Foundation, and for half of those 22 years, we've now been Australian Communities Foundation. For those of you who are very familiar with the US context, we are now more similar to a public foundation in many respects than a community foundation. So we give right across Australia. We allow donors to set up funds or foundations with us. So we're essentially an infrastructure foundation that supports other people's giving. But what makes us unique in the philanthropic sector in Australia is that we're a very progressive foundation, and that we attract many donors who hold a value set around social and environmental justice. And that is really where our journey towards responsible investing started. And our mission and our values are around activating a nation of givers to create a fairer Australia. And within our donor community, we have around 350 funds, about 1,000 donors, and a corpus north of $100 million. So that's a little bit about us and our journey towards responsible investing. Look, I'd like to say it started from a positive place, Kamal, but I don't think it did. I actually think what's really interesting about this story is that 6 years ago, we started this journey, and it very much came from a period of pain and angst in the foundation. So we have a lot of environmental donors who are passionate about sustainability and passionate about a sustainable Australia, and in fact a sustainable planet. And the way our model works is that donors have a lot of control over their granting, but very little control over the investment portfolio, because all of the funds are pooled and invested together. And the trustees have primary responsibility for both sides of the business, but have a lot more input into the investment. And 6 years ago, we had a very traditional investment portfolio, which would be familiar to many of the people who are listening to us. And we had a number of approaches from our more activist environmental donors to say, what are we doing here? What are you doing, trustees, around the investments? And how can we understand and engage with and have faith that you're actually treating our investment, our responsible investment desires seriously. And it ended up with a fairly big, I want to use the word snafu, but a point of intersection between donors being disgruntled and the organisation really trying to figure out how it dealt with this. And we luckily at that time had really strong leadership from the investment committee, and who stepped forward and said, this is the path that we need to go down. And we started one step at a time, but it's a long story. But our first step along the journey was to move towards ESG investing. And that's what we introduced at that time. And that was at the point I came into Australian Communities Foundation. So I came in at the middle of this really interesting point of tension and change in the organisation.
Maree, I'm sure a lot of people can relate to what you've spoken about, and especially when they're starting on their own journey. I'd like to ask Adam about your background as a member of the Besson Family Office, and how did that position you to be a natural advocate on the board of directors to push for the responsible investing agenda?
Yeah, thank you. It's great to be here. I feel very lucky that I get to work both on the institutional side with Maree, but also inside the family side of impact investing. So as you mentioned, my family foundation is called Besson Family Foundation, which was set up by my grandparents almost 30 years ago, which is their charitable giving. They're still alive. My grandfather's still very active, part of that foundation, and as well as my aunties, uncles, cousins, and siblings. And the transition there was, it seemed to me that it was obvious that the care we put into granting should be matched on the investment side. But that was a completely foreign concept when I brought it to the foundation, brought it to the investment manager. They had a very traditional view of giving, and that the impact was to be done from the philanthropic side, and the investment was purely a means to an end. And so I advocated, and luckily had a lot of support from other family members to start to transition. And we took a slightly different route to Maree. We started by doing a carve out, and so we carved 5% of the portfolio out for specific impact investing, and started investing into that bucket. But that process was over years. It took a couple of years between when we started that conversation, when we made our first investment. What was interesting is that once we did the 5%, both the trustees and the investment committee and the investment manager were at a point where they didn't feel it was necessary to take that 5% to 10%, and really we felt like we could go all the way. And so we at that point put a lens across the whole portfolio to say the whole portfolio should be positively geared as much as possible, and put some negative screens in to make sure that where we couldn't be positive, we at least weren't negative. And so that was kind of my journey, which has been probably about 5 years now on the family side, and then also do my own family office, which was being set up as 100% impact from day one. And so that's been an easier journey. We haven't had to transition from one type to another type. But yeah, I think that made me a valuable ally to Maree on this journey.
I'm sure it was much needed. So can you, Adam and Maree both, can you tell us about the process of getting the board to agree to the transition of the endowment? Perhaps if we start with you, Maree, first.
Sure. So I think what I'd love people to take away from this story is that for us, it was one step at a time, and just moving an environment of many people and many stakeholders to a point where people were comfortable. So I described the start on the journey was a push from our donors. And then I came into the organisation and realised very quickly that wasn't a great place to be as a leader, and we needed to be, out ahead of our stakeholders and anticipating what people were going to want, and not waiting for people to get upset. So we went through a number of different really strategic moves over a period of years. So, and now I'm talking 2 to 3 years. So we started with our ESG investing. We introduced our negative screens, which were very simple negative screens back then. We made sure our fund managers were signatories to the various responsible investing bodies. And then we did a fair bit of strategic work, and the sort of CEOs and EOs and trustees on the line will understand how important that was. So we set the organisation up for being really accepting of the move to responsible investing within our strategy, and we really embedded it in as the core of our next 5-year plan, and made sure all our values and mission and vision statements reflected it. And then the most important points, then we had sort of 2 or 3 really important points. One is we did a board review and realised that, and I really realised as CEO, if this is where we wanted to go, we needed some champions on the board. And that's where Adam kindly agreed to step up and join our board. And that was a really crucial point. And I don't want to underestimate that, because Adam came from within our donor community, understood ACF, but was also had been through it with his own family foundation. And that gave the board a great deal of comfort every time we hit a point of fear or a blockage. Adam was able to say, actually, you know, we might need to, we could think about it in this way. And I think it's a really good piece of advice for people thinking about moving their own foundations to have some champions on the board, because it deals really well with fear. And then the other thing we did was put our investment services out to tender. And that was a whole process that I'll talk through, but I might stop there and let Adam talk a little bit about his process.
Adam, the champion, how did it feel?
I think that is probably giving me more credit than I'm due. I think we're all puppets of Maree's excellent direction. I do think, though, that if you are trying to change from the status quo, it is much easier to block change than it is to accept newness. And so having someone, and I'm certainly not the only person on the board or the investment committee who has experience in this space, but having people on the board that have experience in the space, who feel comfortable with the language, who feel comfortable with the kinds of trade-offs that you have to make when you're thinking about going into a new asset class or going into a new evaluation process for how you would choose an investment, when you're thinking about changing your investment mandate. If you want to be able to make those changes, you need to have people that are open to that. And it's certainly easier to be open when you have people who have experience. So I think that did change the balance a little bit to make the board more open to these opportunities. And actually, I think that the board has been incredibly open to it, and we've made some really strong gains, probably more than I expected when coming onto the board. So I've been really happy to be there.
Maree, ACF is a community foundation with a large number of stakeholders and donors. So can you speak to the specific challenges of making this transition, taking into account what ACF is?
Sure, and I think that's probably been the most significant challenge we've faced and dealt with, because it's incredibly complex and in an environment of many, to move everybody together. And while I described us as a progressive foundation who attract donors who generally hold values around social and environmental justice, that doesn't mean everyone's on the same place, and it certainly doesn't mean everyone's aligned around some of this work. So I think the most important thing we did was around 2018. We went out to our donor base and surveyed them and asked them a question about their preference for responsible investing. And I've got that. I've pulled up, in preparation for this tonight, I've pulled up that slide. And we asked them to check their preferences between 5 different options. So we asked if they were interested in just a financial return only on investments, whether they were interested in ESG approach, whether they were happy with an active exclusion or divestment, so social environmental harm, or whether they wanted to move into positive investing, or whether they didn't have a preference. And people, one mistake we did make is that we didn't ask people to choose just one. We allowed them to choose multiple. So if you were going to do this again, I would say try and get people to limit their preference. So it was a bit hard to to tell, you know, what was people's first preference. But what we found really clearly there was that the financial only preference was really low in our donor community. So that gave us a mandate to say to the board, let's not make it how it was in 2016, where we sort of had to wait to move towards ESG. Let's get out in front and move to more into positive investment and be thinking beyond ESG only. And we've got a mandate from our donors, and that's the beauty of a community foundation. It comes with challenges, but it's incredibly democratic in the way it operates, and it's different from dealing with just a small group of trustees. So essentially that gave the board a really high level of confidence that they were responding to the preferences of the donor community, and that was the key turning point. That and Adam.
It's important, I think, from sort of engaging with the stakeholders to actually canvass their opinions. So you went through, from the sounds of it, the right path in terms of making sure you canvassed everybody's opinions and took those into account. Once the board was committed to transitioning the endowment, what was the next steps, and how did Bright Light fit in with the new investment strategy?
Yeah, so we knew that we had an indication of preference from our donors. We knew that we didn't have everybody. So we also did a couple of other things to really put a stake in the ground. So we made a very public commitment to the Divest Invest pledge around the same time. And that was another way of actually really signalling clearly to our donors that this is the direction we were moving in. And I think it's important to say and acknowledge, before I get on to Bright Light, that we didn't bring everyone with us. So we did have a couple of people that said, this is not the way that I want to go. But I think we lost one bequest. We didn't lose any donors, we didn't lose any funds, we lost one bequest as a result of making this move. And so I do think it's important to acknowledge that if you're going to have a really strong statement in an environment of many, you've got to allow people to actually say, no, that's not for me. So that was one thing, point that I just wanted to make. How did we get to Bright Light? So we did, we're jumping forward now to 2019, and we're at a point in the a cycle of our organisation where we had our investment services were ready to go out to tender. So we tender them at a minimum once every 6 years, and we'd hit that threshold. And we created an RFP and put out a very broad call to across the philanthropic sector, Australia and internationally, for advisors who had four criteria that we were looking for. One, they had strong financial investment credentials. Two, they had really strong runs on the boards around ethical and responsible investing. And three, that they were values aligned for us as an organisation, and that they were could see and bring to life a good business partnership. And it was really interesting how quickly that narrowed the field down, particularly within the Australian context, to a few players. And to fast forward, essentially that's how we came to Bright Light. And the really big change for us that we spent a fair bit of time agonising over is that we'd been with a very well-known retail investment advisor, and we were, in moving to Bright Light, we were moving to a firm that wasn't particularly well-known but had really strong, at that time, really strong positive and impact investing credentials. And that for us was probably the bravest move we made to introduce a partner that wasn't going to be someone that our donors, a name that our donors immediately recognised.
Tim, this is a good point to bring you in. So can you share about Bright Light Investment Management's experience with responsible investment and your mandate with ACF?
Yeah, as Maree's pointed out there, most of our work to date had been across institutional investors and community organisations in the areas of responsible and impact investing. And what we do as an impact and responsible investment advisor is work across a range of investors and help our clients to allocate capital in ways that reflects their values and their mission and purpose, while still achieving their financial outcomes. And so we work with pension funds, banks, government departments, wealth advisors, community organisations, and community foundations like ACF to chart out a path that just delivers alignment between investment performance, investment impact, values, mission, and purpose. To do that, we use a range of strategies, negative screening, the integration of environmental, social, and governance factors. But for us, what's far more interesting and impactful is shareholder advocacy, active ownership, and specific impact investment strategies that are designed to deliver values-aligned impact outcomes, and not just environmental, social, and governance screening or negative screening. And the team has been doing this for a long time, firstly within Christian Super, an Australian pension fund, and then since 2016, having spun out of Christian Super for a range of other clients. And so we've got a deep history in looking at not just responsible, but genuinely impactful investment solutions that deliver beneficiaries the returns that they need. For Australian Communities Foundation, our role is to support them on all aspects of their portfolio as we work with their investment committee and their board towards a fully responsible and increasingly impactful investment portfolio. To start with, that has involved looking deeply at their existing portfolio, which, as Maree has said, already took negative screening and some environmental, social, and governance integration factors into account. And then mapping out a transition journey to increasing values and mission alignment alongside financial returns. And so to that end, we've worked with the investment committee to replace some of the existing underlying funds with managers or products that are designed to achieve same financial outcomes, but with a stronger focus on responsible and sustainable investments with SDG alignment. And that's the work that we'll be continuing to do as we move towards a fully responsible and then impactful portfolio.
So what are, I know Maree had mentioned the previous investment strategy. So what are the current plans and what are the future plans, Tim?
Yeah, so the current plans, we've almost completed a redesign of the equities portfolio to use a full range of managers that are, as I said, not just aware of environmental and social governance factors, but actively investing in companies that are part of environmental and social solutions and integrating things like the Sustainable Development Goals into the way that they manage those equity portfolios. And we've done the same thing on the fixed income portfolio. The next step that we're working with the investment committee at the moment on is starting to integrate private market impact investments into the portfolio. So these might be specific funds that target SDG aligned outcomes around poverty or climate action. They might be social impact bonds, but we're working with a long history of researching impact investment opportunities, fund managers and direct opportunities to help design diversified portfolios so that ultimately the ACF portfolio not only represents a commitment to responsible investment, but represents measurable, additional, genuine impact outcomes that align to ACF's broad mission and purpose, and we hope align specifically to the focus areas that ACF donors are interested in supporting when they join and participate in the ACF community.
Does it include South and Southeast Asia as well?
At this point, the portfolio doesn't have any exposure to South and Southeast Asia, but our suite of impact investment opportunities that we're looking at has a significant number of opportunities in South and Southeast Asia. For other clients, we've already invested in microfinance strategies in Southeast Asia and South Asia. We've invested in renewable economy, green economy solutions in South and Southeast Asia, as well as job creation strategies there. There's obviously investment reasons and opportunities why South and Southeast Asia represents a good opportunity, but there's our experience has been in working with impact managers who look at that sector, that there's a real understanding of the alignment between social impact outcomes and financial outcomes, between creating financial returns and creating jobs, or reducing poverty, or creating climate-friendly solutions.
So you mentioned for ACF, you looked at the SDGs and you took those into consideration. Can you share more about your impact measurement framework that you've used for ACF?
Yeah, so for us, the SDGs provide a really useful roadmap to understanding avenues of or channels of impact across different types of assets. They speak to the direction the world wants to go, and in doing that, they give us an insight into the types of investments that are likely to be aligned with that global direction. And then they provide a useful classification methodology for both our listed and unlisted investments. The SDGs don't measure the intensity of impact as a classification methodology, but they will tell you whether your portfolio is achieving diversified impact across different areas. Impact measurement has been a challenge for the impact investment community for a long time. As investors, we have really clear frameworks for measuring financial outcomes in terms of risk and return and diversification and correlation. And we lack those same frameworks for impact measurement. And so we're working across our clients to think about frameworks that measure outputs, outcomes, and impact. Outputs, the types of things that our investments are supporting. It might be a program to reduce drug use, or it might be a program to allow borrowing access to finance from people in underserved communities. The outputs are relatively simple to measure. The outcomes are more difficult to measure. What's the effect of that intervention or that access to capital on the intended beneficiaries? Does it result in improved education, improved access to finance, improved health outcomes? And then, of course, the impact is another step again. Does it actually result in lives that have been materially improved because of the interventions that have been made through this capital? So we use a few different frameworks to measure impact. We're still working with ACF, and likely we'll end up using different measurement frameworks for different types of investments. Measuring the impact of a social impact bond in Australia, for example, is quite different to measuring the impact of an access to finance investment in Southeast Asia. But yeah, this just gives you an insight into some of the challenges and where we think we can take the ACF portfolio as we look to measure impact in ways that align with donor expectations and ACF focus areas.
How have you worked with the investment committee in ACF in making sure the investments fit their 100% responsible mandate?
It's been, Maree spoke to kind of the support at board and committee level that's been crucial. And I think that's common across all of our clients, that sense of commitment from the moral owners of the organisation, the stakeholders of the organisation, towards achieving responsible, values-aligned portfolios. And so for us, the relationship with the investment committee really becomes a dialogue. What does it mean to you to implement responsible investments? What does values-aligned investing look like for ACF? And that means conversations about negative screening and the parts of the portfolio that we won't support. It means conversations about desired impact outcomes. And initially that's in fairly broad categories of climate and society, reducing poverty, addressing disadvantaged communities. But as more and more impact opportunities become available, we hope that that conversation becomes more and more targeted to align with where ACF donors are deploying their grant capital. The investment committee retains decision-making authority over manager appointments and strategy. And so we work closely with them every time we want to bring an opportunity. We're preparing right now for a meeting in a couple of weeks where we'll be showing some impact investment opportunities and talking about the financial merits of those as well as the impact outcomes. But it really needs, as Maree already talked about, it really needs that partnership aspect, because you're not just designing an investment portfolio, designing a values-aligned investment portfolio, and that has to be informed by the people who know those values the best.
Adam, are you involved with the investment committee and in liaison with Tim on the suitable investments that fit that mandate?
Yeah, so that's one of the roles that I take within Australian Communities Foundation. And so I think Tim's right that it is really a partnership there. I think our experience with the prior investment manager was a misalignment on how we wanted ESG or negative screening or impact to be implemented versus their innate kind of attitudes. And it meant that in meetings they would present opportunities which they knew we probably couldn't implement because of our negative screening, but because it was so customary to their way of doing business. So I think what is great about working with Brightlight is that we have a baseline where we understand that they're not going to bring us anything that doesn't meet our mandate, and then we can talk about how well it meets it, not if it does or if it doesn't. And then sometimes it meets it very well, and then we can go ahead with the investment. Other times, maybe we're looking for something that meets a bit better on either ESG or financial.
How frequently does the investment committee meet with the investment manager?
So we were meeting quarterly, I believe, although through COVID, it went to weekly. So pretty tight time with the volatility in the market. As things have started to slow down, I expect us to go back to quarterly.
Maree, this is a question for you. I mean, COVID has been mentioned. How have things changed in light of COVID? And how's that impacted ACF? And what about any liquidity constraints or so on that have been created?
Yeah, so liquidity, I'll start with that last question first. Liquidity is a really interesting challenge for a community foundation because there's such a high level, well, for two reasons. One is we have such a high level of giving. So for those not within the Australian context, the regulations on a public ancillary fund, which is what we are in Australia, is that we need to give out 4% as a minimum each year. And we, as a community, give out somewhere between 8 and 12% each year. So very high level of giving, and that is partly because we have a lot of flow-through funds that sit within us. So people who sort of donate money in and then give money out in a very short period of time. But it's also that there's just when people set up a fund within a community foundation like structure, they're often very motivated by the giving side of things. So liquidity is an issue because we're donor advised. It's not easy to understand what level of giving is going to be occurring at what times and how much liquidity that there needs to be. Lucky for Australian Communities Foundation, because we've been around so long, we have really good trend data on our organisation. So we know that there's a peak in giving in December. We know that there's a peak in giving in June, and that we need to hold extra liquidity then. And we also know our donors well. So, you know, for people who have large funds, we know their patterns of giving, which that can impact. So that requires a really close dialogue with Brightlight, and it meant that Brightlight had to get to know us well in order to manage that. In terms of what shifted in COVID, I think what we're really excited about is that we've just had our biggest FY19, our biggest granting year ever, and that's partly been motivated by our donors' response to not just COVID, but the bushfires. So we've had a pretty rocky start to the year in Australia, with one crisis on another crisis. And so we've just seen around 12.5 million go out the door in the last financial year, and our previous high was around 10. So that shows the level of increase. I think the other key things that we've seen are very similar to what, many great foundations around the world are doing, which is just staying close to our grantees, having unrestricted granting, and making sure that we're doubling down on supporting our not-for-profit partners who are on the front line, and the generosity of the community has been amazing from that perspective.
So now that you are on your journey to 100% responsible investment, and you've transitioned, you're on the other side. if there were things you were to do differently, what would they be? And that's a question for all three of you. Maree, if we could begin with you.
Yes, look, I've been thinking since you told me you were going to ask this question. I think I'm going to answer by pointing to what I think Adam would has said to me really wisely along the way, is that when we've had our nervous moments of, how are the donor community going to respond to this, and are they going to get behind it? He's been there as a fantastic support to say, just trust and have faith that people will follow great leadership, and that you're actually responding to what you've been asked to do, and that you're leading from the front. So if I had to do anything differently, I think it would probably be, in hindsight, worry less and trust more, that we actually knew our donors and our supporters well enough to know that not only was this something that they wanted, it's something that they've been absolutely delighted by and they're so proud about. So I could have saved myself a few sleepless nights if I'd taken Adam's advice earlier.
Adam, from your perspective?
I don't think we've made any big missteps. I think we've done a very judicious step through process, which is not an accident. Maree worked really hard at making sure that this was a thoughtful transition. I think what Maree was saying around fear is definitely something that is, the power of fear is real. And so you can't underestimate how much it might take people more time, or that some people need more convincing, or, as Maree said, some people need to get off the bus because they're no longer going the same direction as you. I think that my personal impatience is that I want to go further, harder, faster. But I think that I have to kind of temper that with some patience as well. So, but that would be the only thing that I'd love to see us do more of. I think we're just at the start of this journey. Let's keep going.
And Tim, any learning from you from having been part of this process that you would have done differently? Yeah,
so we will always say that the journey towards a values-aligned portfolio needs to be a customized and an individual journey for each organisation, and we knew that going in. I think for us, one of the things we've really learned as we've engaged with Australian Communities Foundation, Maree and Adam and others within that organisation is we've learned a lot more about the donor advised fund community and what matters to them. Adam's spoken to kind of the, some people take the journey very quickly and some people take the journey more slowly. It's not just about designing in your head the perfect portfolio that might fit a particular value set. It's also about how you engage with stakeholders and beneficiaries and communities that are important. Most of our work in the past has been done with institutional investors like pension funds and banks. And it's been a real privilege as we've engaged with not just ACF, but also their donor community, to listen and to hear what they're passionate about and to take that time to talk through what we're doing. And I think we had expected that to be important, but had underestimated just how important it has been in that journey.
Great. I think this is a great segue to turn to questions from the audience, and there's quite a few coming through. This one's from Maree and Adam. How did you create a common language framework to discuss impact with board members who may not be familiar with the impact space? Would you like to take that, Maree?
Look, I'll start, and I think Adam would have great contribution here as well. I think the best thing we did was start with our values and our strategy. And so every time we hit a roadblock, we came back to, well, you know, we've agreed that we're about creating a fair Australia. We've agreed that we believe in social and environmental justice, and below that we had 4 focus areas that we had aligned around as a donor community, and they were strengthening democracy, tackling the environment, safeguarding the environment, First Nations self-determination, and addressing poverty and inequality. And they had arisen very deeply out of the granting side of our community. And so what that meant is that we could take that lens and bring it across to the investments, and particularly at that higher level of social and environmental, and how that layers up. So I think the short answer is make sure that you start with the basics and everyone's on the same page around the values, because that's all you've got to come back to when fear comes or when you hit a roadblock. And then I think the SDGs are useful, but for us, we found that they were sort of subsidiary to that sort of higher level impact that we wanted to achieve around that, creating a fairer Australia. And I do think that the SDGs are a tool, but they're not necessarily the end point, would be my quick answer. And probably, Adam, I'll get you to jump in there as well.
No, I think you've covered it great. I see a bunch of questions, so I think we can jump across.
So this one is for Tim. What kind of impact fund managers do you back? Emerging or first-time fund managers, do they feature?
Yeah, so I'll talk broadly across our clients. What we end up with for the ACF portfolio will be what's right for ACF. But across our clients, we do use first-time fund managers occasionally. It's obviously easier to conduct diligence and manager research if a manager has a track record. But we do look at strategies where the track record has been achieved separately, and then there's been a coming together of partners to create an impact investment organisation. For us, what's critical is a clear strategy for financial outcomes and impact outcomes. And then we'll research and analyse and diligence that strategy. And then an alignment, again, on both the financial and the impact side with client portfolios. Some clients are more willing to take risk than others. Some are more willing to look in emerging and frontier markets. Others are more focused on developed markets.
This one's for you, Maree. What were the main objections of your donors to shift to impact? Were they informed objections, or and were they able to deal with this through education and discussion?
Yes, as I said, we had very few objections. I mentioned we lost a bequest, and that came from someone who'd been really connected to the mining and resources industry throughout their career, and they saw that this was just something that was just not values aligned for them, this move. And more generally, I think it's really important to deal very upfront with the fear around, will we lose financial returns? And we've been, through all of our communication, we've pointed to all of the great work through the various different Australian-based and international impact investing organisations to say, no, in fact, you know, all of the data shows that you don't lose out, and in fact, you can come out ahead. And we were also able to compare, even we just did a very simple analysis of our portfolio if we hadn't made our move to ESG, and were able to show even on that basis that we were more strongly positioned. And I have to say, COVID has been a fantastic test of that. We've, you know, when the market fell fairly steeply at the beginning, our portfolio, you know, didn't fall to anywhere nearly the same extent. So we've had a number of different points where we've been able to address that myth and really strongly debunk it.
There's a question here. Are you incorporating pooled funds managed by specialist managers, or is Bright Light constructing all portfolios from individual securities plus the impact investments? This one's clearly for you, Tim.
Yeah, so Bright Light does run a couple of specialist products in disability, housing, in energy, and in New Zealand community infrastructure. They are not part of the ACF portfolio. For Australian Communities Foundation, we're focused on bringing best of breed impact managers to ACF. We also bring occasionally specific direct opportunities. But typically with clients, the portfolios that we construct are probably 80% external fund managers, with maybe 10 to 20% co-investments and direct opportunities that we source.
Maree and Adam, and we suspected this, there's clearly a request. Have you documented the process and have you that you've moved through so that others can adopt and adapt your methodology?
No.
You clearly need to.
But we'd be open to it. Not in a formal way. We've written some articles and we've done some interviews, etc., but we haven't documented the process from end to end, no.
Would you say that ACF is more donor-centric or grantee-centric, especially when it comes to considering SDGs and impact investing operations?
It's a really interesting question. I saw that pop up. I would say on balance, we probably, like many community foundations, try and sit in the middle. But I think it's very hard for a sort of an infrastructure foundation who often deals, the primary relation is often with the donor. So I would say if I had to choose between the two, I would say that we probably fall into most commonly being donor-centric, but we work really hard to walk that middle line.
I'm just looking at the questions coming through and making sure we address as many of them as possible. Other than SDGs, are there other frameworks you feel are relevant to considering balancing your donors' preferences, grantee needs, and impactful investing? Adam, if you could take that one.
Sure. So as Maree said, we've got a lot of data on where our donors like to grant, which has obviously gives us an insight, even without asking surveys, as to where they feel that they want to have their impact, and so that certainly guides us. In terms of framework that we use from an investment point of view, I think the other one that's worth mentioning is the impact management project framework, which helps classify investments. Kamal, you're nodding, so I assume you know it. I'm not sure your viewers or the viewers do, but that has been really helpful in terms of understanding broadly where an investment opportunity might sit, how deep the impact may be across the spectrum, from may cause harm to benefiting communities or contributing to solutions.
We've been working very closely with IMP. We have a number of members in our team who've been working closely. In fact, our last conference had a whole session on IMP. So, and it's online recorded. So if anybody wants to access it, it's there. I'm just looking through the other questions that are coming through. And perhaps this might be the last question. Do you believe there are opportunities in impact investment to support and benefit First Nations people in a fairer Australia? If so, can you offer some thoughts on this?
Yes, but we're at the early stages. We have looked at a number of impact and clearly opportunities in this space would deeply align with ACF's broader set of focus areas and grant making work. And so it's something we're very much attuned to, particularly for ACF as well as for our other clients. The first thing I'd say is that even across the general portfolio, I referred to conversations at the investment committee around values aligned investments on the negative screening. The effect that companies are having on Indigenous people in Australia is something that regularly comes up in those conversations. And so it's not just about the positive impact, it's also about avoiding the negative impact. The areas where we are seeing opportunities for positive impact, there's some infrastructure opportunities that are focused around employment opportunities. There have been 1 or 2 social impact bonds launched in Australia with a disproportionate beneficiary community of Indigenous people. One of the social impact bonds that I referenced earlier, roughly 25% of the intake of kids into that program came from Indigenous families, and the objective of the program was to return the kids to their families of origin, whether Indigenous or otherwise. And there's a couple of environmental focused opportunities or tourism focused opportunities, or putting renewable energy, providing renewable energy access into Indigenous communities. We haven't made any investments yet. We're actively evaluating a few. It's an area that has lagged the development of impact investing more broadly in Australia, and one that we're keen to see opportunities actually invested in and capital deployed for genuine benefit to First Nations people.
Wonderful. This is a question that's, you know, it's an interesting perspective as well. Has this transition to responsible investing, Maree, made you more attractive to prospective donors?
Yes, absolutely. And thank you for whoever asked that question, because it's such a good point about leadership and being brave, which is that while I've talked about the fact that we did lose people, so we've had some people make the decision that it wasn't for them, we've had, they're a really small group, and we've got so many people who've been really keen to join the ACF community because they're seeing this is one of the very few options available for, you know, a really authentic approach to responsible investing. And so I think in terms of future-proofing foundations like ours, I would absolutely say thinking about younger donors, thinking about new members, you know, thinking about values-aligned donors, I can't endorse it highly enough.
If there was a final statement each of you could leave as a takeaway for our audience, what would it be? Perhaps, since Maree, if we could start with you.
Sure. Look, I think my advice for people listening who are thinking, oh, how do I take my foundation on this journey? We'll never get there. My strong advice is imagine yourself 2 or 3 years into the future, and then try and think about the steps that you need to take one step at a time to get your board or your trustees or your stakeholders or wherever to the point that you need to get them to, and don't try and do it all at once, because I think that's when it becomes and feels impossible. But if you can break down the steps and slowly move people one step at a time, then I think it absolutely is possible, and it's what leadership's about. It's just staying ahead of your stakeholders and your supporters.
Wonderful. Adam?
Yeah, I think the key takeaway for me is that this is entirely doable for any size portfolio now. I think that there was a time when that wasn't true, but the amount of product that's come to market, the opportunities, the rigor, whether you're managing thousands, millions, tens of millions, billions, this is an approach that can be taken with any portfolio. And I think I'd encourage everyone to do so.
Tim?
Yeah, just building off what both Maree and Adam have said there, I think there's any investor can take active steps to align their portfolio more closely with their purpose and values. And that doesn't have to compromise financial outcomes. In fact, as Maree's pointed out, often it's aligned deeply with achieving better financial outcomes. There's options and opportunities to deploy capital for meaningful impact today that could only be dreamed of a decade ago. And so it's not an easy journey, but it's a deeply worthwhile one that's worth anyone seriously considering at least taking the first step along.
Thank you, everyone. Maree, Adam, Tim, this has really been informative and clearly important to take into account. No matter what the size of the portfolio, it's a worthwhile journey to take. Thank you to all our listeners for their active participation. Please do visit our events page to sign up to our next climate-focused webinar on the 20th of August. The link is in the chat. Thank you, everybody.